if you look at the markets, they've traded within a very tight band for the longest time now. We've never seen the market get past the 18,000 mark. To your mind, what will it take for us to break that level?
See, again, George, let's look at bottom up. The market index is a top-down view. And we have got to ask about each company. And one of the challenges we face is the representation on the index of many companies comes with challenges on sectors, some of it on governance, and some of it on what kind of performance these individual companies have, whether it's because of leverage, unhedged foreign currency. So there are a whole host of issues in the bottom-up choosing of the index. And therefore, the right advice for savers and investors is get away from index levels. Look at micro companies, whether they are in the index or no, and judge them on the kind of business model they have, the kind of sector they are in, the kind of governance practices they have, and how committed they are to excelling independent of equities and markets. Too many promoters are too fixated on price levels.
Right, now, even if you looked at the micros and you focused at companies specifically, there was this big fear about a couple of months back that the Q4 numbers of most of even the good companies would get impacted simply because of regulatory challenges and the overall domestic environment. We've still seen them, ride that difficult phase and come through. But given the, policy paralysis, as we like to call it today, would you say that the challenge for even the smarter corporates only lies ahead? That there are more difficulties that they're going to face simply because of government inaction and the domestic environment we are in?
I think first of all, corporate India needs to move away from a sense of denial to accepting that this is reality. Secondly, we must face reality rather than worrying about what it does to our quarterly numbers. Think about business as a medium-term proposition of creation of value. And corporate sector is too engaged on short-termism and a sense of denial and a belief that where else will global money go? They have to come to India. It is not true. We need to do our work, go back to what India has been damn good at. If you go to the late 90s, software services, telecom, Indian manufacturing re-engineered itself. And we saw creation of an outstanding high-quality corporate India. 2003 onwards, corporate India also, on the back of big capital flows, took it for granted that growth is our birthright.
Right. So, if you look at India, entrepreneurship in India has thrived despite the system. Today you've got a more organized environment and things are not working out for corporate India. Corporate India is taking the easy way out, pointing fingers at the government. Would you say we ought to go back in mindset to the 80s probably, where entrepreneurship thrived despite the system? Would you say that's the way out of the current crisis?
I would give a comparison more to the late 90s. And it took us a few years to really get ourselves competitive. Look at India's competitiveness. There was a rupee depreciation in 95-96. More than 20%. And thereafter you saw the development of Indian software services sector from nowhere. Number one. Thereafter you saw the telecom revolution. And in that period of 3 or 4 years, India Inc. focused on competitiveness. Post 2003, India Inc. stopped focusing on competitiveness, focused on growth at any cost, not measuring how productive that growth is. Therefore, we saw huge wage increases. We've seen huge real estate increases, rental costs go up, absolute cost of operations go up dramatically. Front-end sales forces, high churn, younger generation ready to move jobs, fine at getting disproportionately higher pay packets. We have had a challenge to our competitiveness. And the depreciation of the rupee is a reflection that India needs to regain its competitiveness. And we at the micro level, each of us, rather than complaining about what the government is not doing, we need to focus micro. get our act together, increase our productivity and competitiveness at the unit level. India's success and turnaround in the 90s was bottom up.
All right, now, one view is that the last time we saw a big bang reforms in India was post 91, when we went through that big balance of payments crisis, when the government was pushed to a corner. That, a large section of people are today once again saying that it will take something of that nature once again to push the government into a corner and start pushing ahead with reforms. Would you say that that is very likely to happen, and would you agree that that's exactly what we're going to see now?
George, my recommendation is, let's not wish that somebody else outside us does things which will make us better. If that happens, that is good news. What are we doing inside us to get better? And somewhere in the last 5-7 years, because outside us things helped us look better, we probably have stopped asking tougher questions to ourselves inside. How do I make my business more competitive? Where have I got inefficiencies? What can I do strategically and think out of the box for a creative way of growing? How did telecom revolution happen? It was in the middle of a crisis. Yes, government helped, but there was a whole set of people out there, whether it was Bharti or Hutch or anybody else, who was waiting to be efficient. Your cost per unit of a telephone was and is the lowest in the world. The government did not do that. The government created an environment, but business did it. So what are we doing today? And the level of complacency which is set in, and probably a little less levels of hunger which corporate India has compared to what was. We were honest, down-to-earth, middle-class mentality, hard-working Indians. That is the Indian image late 90s. Today, that image for a while was exuberant, aspirational, little bit of hubris, successful, probably complacent, and this is the change we have done to ourselves in 10 years. Let's get our edge back.
You talked about the weak rupee and possibly that, in some sense, actually presenting an advantage to some of the export companies. Parallelly, the current account deficit is a big area of concern. There is this view that we're going to go to 4% before the end of this year. What is the fix for that?
I think current account, if you look at the year March 12, was in excess of 4%. Current account deficit somewhere between $75 to $80 billion. I think it is changing for the better. I think oil will save us between $10 to $12 billion, and gold imports will be lower by between $15 to $20 billion. So my perception on current account deficit is more around $50 billion, which is around or less than 3% of GDP. That, I think, is a more comfortable position. But the fact of the matter is, most of this change in current account has happened for external reasons. We need to see Indian companies far more competitive. We are guzzlers of imports. How many of our companies are exportable or competitive? And again, capital markets have very little representation of export-oriented companies. Therefore, the real economy is actually seeing some export-oriented companies getting to be more efficient. Markets are not seeing it. We as banks are seeing it.
Okay, and speaking of banks, how are you viewing the financial services sector? There's this whole concern and a lot of noise about the problem assets within the system. Would you say that it's a little exaggerated, or would you say that maybe there is a fair element of truth in the concerns that people have about asset quality?
Okay, let's divide it into different parts. First part, in part one, is a concentrated issue with 40 to 50 companies or groups. So huge leverage, large exposure to projects or infrastructure, execution not completed, and in many cases unhedged foreign exchange. So this is a sector which is a 40 or 50 companies, highly concentrated with disproportionate borrowing from banks. This concentrated problem is a pressure point. However, if the economy slows down and these companies get into deeper challenges, the connected sectors and companies begin to see some of the strain. For example, if infrastructure companies have trouble, it moves to construction equipment and contractors. Slowdown in demand for commercial vehicles. So we are seeing early stages of this moving to other sectors. However, the second stage, which is the contagion effect of the concentrated challenges of 40 or 50 companies, is still early. And a slower GDP growth hurts and leads to more spreading of this problem.
Right, now there's this whole thing about, the government and India needing to change sentiment around the country. Now, one view is that we need big bang reforms to get that sentiment to turn positive. And just picking up on the point you made, one view is that some of these last mile connectivity issues that a number of large projects face, if you just address that, the whole sentiment issue can change significantly for the better. Would you go with the latter or would you go with the former?
I think you need to do both form and substance. Form alone does not take you there. But form backed by some substantive action, both from the policy as well as from business, is the key. And we should move away from a mindset of quick fix. If there is an issue, let's deal with it. If it takes a little longer, let's do it properly.
Okay, now focusing on the RBI and the monetary policy action that we had just a week back, would you say that the RBI was justified in holding back on rates? And again, would you say that inflation continues and will continue to pose a big challenge for us?
The governor made an interesting point that there's a very large number of silent people who don't make the noise in media. But they are getting hurt, whether it's a wholesale price index or whether it's a consumer price index. And as income levels grow slower in a slower GDP, if more and more of their non-discretionary spend goes away, it is a challenge. The question is, how do you fix the investment side of the equation? Do short-term repo rates change the investment side? And that's the question we need to ask. And having said that, while I do believe that we can, at this stage, live with the current levels of interest rates to ensure that consumption side gets more control, we need to have very good answers on how investment side will get better. And in a slowing economy where fiscal revenues are going to drop, how do you correct fiscal balance for spurring investment demand? It's a problem everywhere in the world, and India is going through the same challenge. In an austerity period, if that's what fiscal policy needs to be, in a slowing economy, how do you spur investment demand?
Right, so this goes back to the argument of fiscal policy versus monetary policy. Would you say that the government has for far too long, pointed fingers at the RBI and said that, look, if the economy is in trouble, you guys need to fix it. If there is a problem with the economy, you guys are to blame. We've got nothing to do. Would you say that the government hasn't taken enough responsibility about fixing the challenges that we face?
I think one of the ththings which happened post 2008-9, when everywhere in the world we were seeing stimulus come, our stimulus was directed a lot at the consumption side of the equation. We should probably have focused more on the investment side. And even now, I feel that if there is a fiscal expansion of any nature, we need to change the mix more towards investment and less towards consumption.
All right, Uday, thanks very much.
Thank you very much. Thank you. Thank you.